Several banks have already failed. This last one was so interesting that I gotta talk about it. First Republic Bank started failing when depositors started withdrawing their funds. When this happens, the bank kind of freaks out because no bank actually has enough money to cover their deposits. When the crowd understands this, the crowd panics and makes an attempt to withdraw their funds. That's a bank run. Now that just causes more panic. The stock price plunges, they lose confidence, the bank fails. Now the events might not happen in this specific order, but all of the events do happen, and once confidence is lost, the bank collapses. Now anyone could have seen this coming. Financial YouTube channels and real news sources have been talking about it for weeks. So it finally failed, and the bank was completely insolvent with something like $50 billion that can't be accounted for. Some would say it's lost or stolen. Some say $50 billion, others are saying it might be as high as $100 billion. The number doesn't really matter because the money was never there. The remainder of the assets of First Republic Bank were purchased in a semi-secret pre-dawn meeting with the FDIC and JP Morgan Chase Bank. The Federal Deposit Insurance Corporation, the FDIC, is an independent agency created by Congress to maintain stability and public confidence in the nation's financial system. Well, because they're an independent agency, they're not federal. They have enough money in reserves to cover about 2% of national deposits. So they can't provide stability, and I'm not very confident that they can do anything when it actually hits the fan. Now, this semi-secret, mysterious meeting with JP Morgan Chase is rumored to have happened around 4 o'clock in the morning before the markets opened. JPM, that's the trading symbol for JP Morgan Chase. Okay. JPM agreed to take over and buy what's left of First Republic. But see, JPM doesn't have any money either, so they needed a loan from the FDIC of $50 billion. Now that's the part that got my attention. Not that they needed a meeting under the cover of darkness at 4 o'clock in the morning. That's kind of really late Sunday night to most people. But JPM needed $50 billion in order to make the purchase. If the FDIC was going to give $50 billion to save a bank, why didn't they just give it to First Republic Bank in the first place and save the bank without transferring all the assets? Well, I got a theory. I think it goes back to the phrase, too big to fail. First Republic was a big bank, but not a huge bank. All of their remaining customers, deposits, loans, and assets are now owned by JPM. I think they're consolidating. No, they're funneling. They're funneling everyone into a few major banks. It's my opinion that we aren't even close to seeing the last of the bank runs and bank failures. Each one will be absorbed by Citibank, Wells Fargo, and JP Morgan Chase. Once the majority of banking is being done in just a handful of giant mega banks, well, they can do just about anything they want. Let me give you some examples. Remember the trucker protests last year in Canada? When the truckers were protesting mandatory vaccines, they were locked out of their bank accounts. Bank accounts closed and denied access to their own funds. It doesn't matter if you agree with the truckers' vaccine position or not. The end result was that when they went against the government, they were locked out of their banks. Do you think this is going to be easier or harder when a handful of banks control just about everything? Especially if these banks are gobbling up these failed banks specifically because they were given government money to do it. The government is buying a product. Now they kind of own these banks, like a silent partner. But the worst thing is they're doing it with your money. Sick and twisted, isn't it? Now, this isn't the first time government money was used to create a monopoly. Amazon.com and Walmart were given incredibly sweet incentives to grow to their current sizes. It's reported that Amazon didn't make any profit for many years. They were propped up by an invisible hand. Well, that hand had pretty deep pockets, by the way. So Amazon grew and grew, all the while destroying small businesses along the way. You ever driven down a city main street that used to be lined with these cute little specialty shops, boutiques, and family businesses? They're all gone, because now you can get the same thing from Amazon for $1 less and have it delivered tomorrow for free. Same goes for Walmart. Local grocery stores are all but extinct. Same with hardware stores, clothing shops, shoe stores. The list of dead stores goes on and on and on. Did you know that you can buy a single box of macaroni and cheese from Walmart and get it delivered for free in a few hours? There's no possible way to make any profit on that sale. Mathematically, it just doesn't make any sense. I think they're being funded to destroy any competition. But back to the banks that are being consolidated. This summer is going to be very interesting. The bank failures are going to start happening much faster. Soon there'll be a few every week, then a few every day. Unfortunately, due to human nature, once something happens so often, no one seems to care much, and it won't be on the nightly news. People will just get used to it. And soon enough, no other banks will survive. It'll just be the big ones. But at some point, they will be satisfied that they have enough power and control to move to the next step. CBDCs, central bank digital currency, will be rolled out. If you've never heard that term before, it's just a fancy way of saying digital money. Now, most of you already use digital money. See, when you use a debit card, you're just moving numbers around on a ledger. No real paper money is being transacted. But with CBDCs, the government controls the ledger, and they can create or destroy money as they wish. CBDCs are programmable money. Here's an example. If you're trying to spend your money to buy a cold six-pack for the weekend, they might decide that you've had a little too much beer lately, and the purchase will be declined. How about going out to a nice restaurant? You order a giant steak, fine wine, sit back with a nice cigar to wrap up the evening. Hold on a minute. All of this extravagant spending is just not fair. All of this opulence is making some people feel bad because they can't afford a nice dinner. So that transaction might get declined too. What about buying a brand new shiny Glock 19? Don't even think about it. They're too dangerous. You see where this is going? I know it seems dark and there's no hope. Well, it is dark, but all is not lost. There are several ways you can make it through this a little easier than most. 1. Own physical assets. Many people are going to run to gold and silver. Now that's been money for centuries, maybe even a millennia. The only problem is that once the US dollar starts failing faster, the price of these assets will really rise, especially when purchased in US dollars, and they'll be a lot harder to buy due to scarcity. 2. Be debt-free, or use debt extremely responsibly. Now, if you have a variable rate mortgage, you're going to be toast. This is not advice, but if you have a variable rate, I would either pay off the mortgage somehow or refinance into a fixed rate to control the price when more inflation is going to be coming later. 3. Be self-sufficient. Raise some of your own food. Learn to make your own clothes. Try canning veggies. Pickling or fermenting food is fun too. Get some chickens. I've got 50 chickens. You certainly don't need that many. But I plan on providing food for me, my family, and any hungry neighbors that need a little help. When eggs were $10 a dozen a few weeks ago, I had a lot of friendly neighbors all of a sudden. But at that point, they were willing to listen about planning for the future, especially when their kids were hungry. 4. I know some people are going to click away in exactly 5 seconds. but you might want some exposure to Bitcoin. Sure, it's a digital currency, but no governments control it. And if you bought it early, you have made an absolute fortune. Whether you like it or not, it will be part of the future. And those that hold it will be way better off than those who don't. So it may get dark, but this country, and in fact every country on earth, has been through hard times. We're just in that part of the cycle again. So summer's going to be here real soon. Plant something you can eat, even if it's a single tomato plant. Quick update. I usually record these videos late at night. It's the only chance I get to sit back, relax, and have a little fun with this hobby of mine. Now, I recorded the audio part of this video on Monday night, but I didn't get it edited until late on Tuesday. Well, technically it's Wednesday. It's 2:14 in the morning. That's when I have time to do this. But there was another story that just broke, and I wanted to squeeze it in here. PacWest Bank, Pacific Western Bank, is also failing. It might fail by the time you listen to this. But if not, then I finally got ahead of a story. And I think it's going to fail sometime this week. Now, this is just a prediction. It's obviously not financial advice. But when I said more banks will be failing, I wasn't kidding. They're going to start dropping every few days. You'll see. All right, I got more videos coming later, so I'll see you soon.